Okay, guys, welcome back to another session. Okay, and this is going to be our day 6th of backtesting. Okay, right. I'm trying to understand my strategy more and more. Okay, I'm trying to clarify it. And in the last session, what happened? We took 4 trades, right? And out of those 4 trades, we were having loss on 3 and profit on 1. Okay, and we're following the money management. It says that if you are just continuously losing, you have to go on to the minimum loss you can take. So I was taking a loss of around $10 as much as I can take. Okay, so first $10, again $10, and again $10, and in the next trade I had $80 of profit, and 1 hour ended and we got back to up. Okay, so right now we are 4.5% up. We have traded around 1 month of the data. See, I do not know my strategy. Oh, like I know it, but I have not traded it live. Okay, I do not know the analytics. I do not know what is a good time frame to apply those strategies. Okay, so all of these things I'm trying to test from 2017 data. Right. Once I'm done with this 2017 data, I'll go with the 2022 to 2024 okay data to actually get out some analytics, because that will be useful. I want to know how much like maximum trades I have, what is the maximum risk reward, minimum risk reward, average risk reward, and all those things I want to know. Okay. So before that, I should actually know what my strategy is, how can I trade it, and everything. Okay. I guess that is it for the introduction. I should start with the live session now. Okay. I hope stream settings are okay, right? And live is going on, 1 minute 40 seconds time. Got it. Okay, now we can start the session. So we have this around 10,000 we have started, 4.5% of the profit we have. See, I'm starting with $10,000 because in prof firms I'm not going to pick up directly a $1 lakh account, right? Okay. So hello guys. Okay. So directly I'm not able to pick the $1 lakh account. Obviously, I have $15,000 of Profirm account and $6,000 of the Profirm account, but I have to wait. Why the quality is so low? Okay, it's good. So I have what? I have $6,000 account and $15,000 of the account. Okay, and what can I do? I hope the network is okay. Got it. Now, because if I pick $1 lakh account, it is like too much unrealistic. But if I pick $10,000 of account, it is somewhat realistic. That's why I'm picking it up. Got it. Now we have the session over here. I have bought recently a new gadget to actually increase my backtesting capacity. Okay. Now not just this time, I'll also be trading in some other times as well. Okay. So I don't know which thing is this thing. Okay, I guess. Okay. This was, I guess, the last 1:8 trade I took. I'll delete this thing. Okay. If I can see, can I see my trades? So okay, this is the $80 of profit trade I took yesterday. Okay, this is the trade I took. Once down, and it, as soon as it hit the target, okay, I was expecting these lows to be taken. It just got pierced through a little bit. Okay, got it. It pierced a little bit and then it went straight forward up. Got it. So you have to just keep an eye on your target. See, at this point, this particular gap, you can see the market reversed around. See, this was the whole moment and the market reversed too much. At this moment we might lose our psychology and take our trades in. Okay, that's, it's not going to reverse and all those things, but yeah, it is reversing for this fair value gap. Can you see, this is the fair value gap? It is reversing for this. Got it. Let's delete this thing. Okay, should I delete it? Is there any method to show the, okay, okay, it's in settings. Okay, if you want to show it through that green and the red bar, or if you want to show it with another thing. Okay, wait, somebody, I have to remove. Okay, all right. Ah, now let's get back to the session. Okay, we have the 2022 GBP USD market loadout for it. Now these lows are taken, right? What do we expect? Obviously the further lows are going to be taken out because they are way too much near. Like, can you see these lows? Okay, so let's not start from a 1 minute time frame. Let's go on to the 1 day time frame. So here we have the 1 day time frame. Let's try to understand this thing. So whenever you're journaling, try to just put in some good things. Okay. Uh, we are at this point of the time, right? If we go below this point, we can somehow, manage this whole. This is the whole upward price swing. If we come nearly at this point 5, we can actually balance out and do an equilibrium thing. Okay, so at least it should come near to this zone. Can you see? If according to this whole price swing, okay, Hmm. according to this whole price swing, if we come out at this point 5 level, is there any equilibrium thing? No, this is the equilibrium, right? Let me put on. So this is the equilibrium, right? Our market is right now at this position, and I expect the market to actually be bearish. Okay, I want it to be bearish. Okay, right now what is the day today? It's 6 February. I want it to be bearish. I want it to go down now. Can you see this low and this low? They are kind of making an equal. Let's go on a 4-hour time frame. We go on a 4-hour time frame. We can see one low is here, another low is here. Okay, these lows have high chances of to be taken out, right? Okay, now okay, the lows that we're seeing in the 1 minute time frame are these lows. Okay, and further you can see there are some equal lows as well. Let's see. And also equilibrium line is there. It means the price has gyrated or done a great high price swing. It needs to come down, right? I don't think it is going to take out these highs right now, not right now. Okay, and equilibrium line, this is the equilibrium line. It should come down, take out these lows and these lows as well. So I'll be looking for a sell entry. Our daily bias is sell. Okay, got it. Now let's go on to 1 hour time frame. Got it. I'll just delete unnecessary things. For an example, like this sell side liquidity, no need it. Equilibrium line, no need it. Buy stops, no need. No need. Okay. If I see this price swing high, this is the fair value gap. Okay, got it. This is not needed now. Okay, so this is the thing, right? The market has been. Let me just turn this thing on. Okay. I want to see which trade I took. Okay, I took the trade on till at this point. Okay, let's go on. 10-minute time frame, right? Okay, we took out exactly these lows. Okay, and these lows are not taken to be taken yet. Okay, and these lows are yet to be taken. So let me just point out these lows as well. We are looking for this level to be taken. We are looking for. Okay, I'm looking for this level to be taken as well. It's a sell side liquidity, right? So two sell side liquidity needs to be taken. This is the sell side point. Okay, and there is one more thing. I should delete it. Command. Okay. Hey. Now, this is sell side liquidity. Got it. So I am anticipating that these sell side liquidities needs to be taken, right? And the price when it is wanting to go lower and lower and lower, it will create a displacement downwards and then create a fair value gap. The price will come back. For an example, went down, created a fair value gap, right? Can you see this fair value gap created, and then again breakdown, again fair value gap created. Okay, the price went into that fair value gap, breakdown. Got it. And again this fair value gap has been created. Can you see, guys? Right now at this position, some fair value gap is created, right? This fair value gap has not been reached right now. But can this thing come to that fair value gap? Because highs are under it, and this low is not so good. I have to somehow form a good entry. What is the time right now? Time of the day. It's 13:30. It means the market is going to continue its movement in the New York session, and I will be looking again for a sell trade because I have sell side liquidities as well, which needs to be taken, and a below sell side liquidity which needs to be taken too. Got it? So that's is the reason I'm anticipating a sell side liquidity. Okay, so this is a 15-minute time frame. Let's go on a smaller 1 minute time frame right now. See, until unless see with the money manager, I'm thinking until unless with the yeah, until and unless I see the scenario is way too good, I it is way too clean, right? I'm not going to take some trades, got it, which are greater than $10 because I know I have a greater risk to reward, but yeah, lesser some. Okay, we have this thing. Okay, at least if it goes in this level, then I will be more safe. I want it to go in this level. Uh, then I will be more safe than ever. Okay. If it goes in this level, then there is some kind of entry form. I'll put the stop loss at this point. Okay. If it gyrates upward, definitely it is going to go in this point. Okay. But if it gyrates downward, I might miss the move. So I'm going to take a $10 loss. Otherwise, I might miss this move. So if it takes out from there to downwards, fine. Okay. But if it doesn't, then I'm going to take a $10 loss on this thing, and then I'll anticipate an entry over here. Okay. So $10 of the loss just for a why it is happening. The wire or something. Fine. Uh, okay. So let it just go in that position. Nah, why, bro, why you broken down? Oh, it broke down. So these lows are broken, right? These lows are broken. These lows are broken. I think it is gyrating for this low, but at least okay, it didn't come out at that point. Oh shit! Wait. The fair value gap was at this point, and it touched the fair value gap. It got back again. Oh, it will look weird. Okay, now see. Mm, think about this. Now it has taken that thing. I wanted to jump in, but it just touched the fair value gap, and I didn't mark the fair value gap that well. I should have marked that fair value gap properly. Okay. But anyways, if the move is missed, the move is missed. We can't do anything. Okay. Let's start on. Hey. Oh no. It's definitely going to take out that low. Okay. Direct price downward movement. Okay. Uh, uh, let's see what it's trying to do. I want the markets. It is coming down. Very good. It came back into that point. Okay. Just a second, guys. Okay. Now, it came back into that fair value gap, but I don't see a displacement downwards. I want to see a see. This is going to be a market maker buy model and then market maker sell model. I want to see a displacement downwards, okay, so that so that it creates a fair value gap, and then I will enter into that fair value gap and put my stop loss on the high of that point. So uh, fair value gap in here, right? But it's not a displacement. Should I take it or not? It's not a displacement. Okay. Maybe on I'm watching 3 minutes. Like we should go from 5 15 minutes, 5 minutes, 3 minutes. Okay, just to find a fair value gap. But in this case, yes, I can see a fair value gap, but also I can see upwards. Okay. 1 minute time frame. Okay. Scenario fits in. Fair value gap touched. This created a fair value gap downwards. I'll see for the price to swing down. The time right now is around 350 for an example. 350 right now on Indian time. 5:30 the New York market will start. So let's see what I can do now. Okay. Mm, fair value gap. Got it. Entry done. Now where should I keep my is there any fair value gap inside of this thing? One, two, no, no, a big no. So there's a fair value gap in here that has been touched. Got it. I'll somehow keep my stop loss at this point. I don't want to be swinged out. Okay, so short, right, at the high of this point. Okay, I'll keep the high at this point. Did I keep? Let me see. This is the stop loss. This is target. Okay, but see the upward price movement before a downward swing. Okay, I'm gonna apply my thing. Oh, it's applying upwards. I want a 4% standard deviation over this thing. Can you see? So some 4. Okay, on the 4% standard deviation, the bigger time frame sell side liquidity is coming. Okay, and it has a good chance that on a 4%, 4 times standard deviation, that thing is going to be taken out. Okay, the market is right now not moving. Okay, so wait, control Z. I'll take an entry. I'll put a stop loss. Okay, maybe the high of this point. Okay, that's it. I don't want to be too much, what you call it, bragging about this thing. Okay, or should I think about it? I should keep the high thing. Okay, so see, I'm keeping the target as this sell side liquidity. Okay, let's keep it a little bit below, right? At the 4 point. Now the trend is this thing. If I decrease this thing to at that point, but why am I decreasing this? Let me just I'll see about the price movement. Okay, so I'm going to take what do you call it? Open position. I'm going to sell at market current balance. I'm going to take a loss of $0.15. Not 0.15. I'm not sure it's okay. Let's take 0.15 because we won last time. It's okay. $15 of loss. The current balance I have to place a trade. That's it, right? Now, okay. Okay. Somehow it's going to be in that fair value gap because it has one, two, three times it has touched that fair value gap. Is going to be taken. Very good. It got taken. Again, back to $10 of loss. Okay. Now, let's forget about this thing. Okay. Next time, if I'm not seeing any good price movement, downward displacement, okay, I'm not going to take that trade. Simple. That's it. Okay. Is there an upper? Okay, there's a higher side fair value gap, right? And there's a lower side fair value gap. And 3 minutes time frame. I need to form my entry. Okay, let's check. 2 2 5. Okay. 2 a.m. Standard time. IST. So 2 a.m. is 12:30 p.m. It means 2 to 5 a.m. will be 12:30, 1:30, 2:30, 3:30. Till 3:30 there will be London zone, and yes, the London zone, when as soon as the London zone gets over, this is around somewhere over at this point. Okay, it got us the profit. Okay, we should have been kept ourselves out, right? So it's back into that zone, right? Okay, now again back to that same thing. I'll just wait for it to do some gyration. Want it. It's gonna go higher in this fair value gap, or maybe a good displacement, or going in this fair value gap. I'll anticipate an entry. Okay, so we have a displacement. The market structure has been broken. Okay, right? Let it come. I want it to come into this zone. Now it is in this zone. Then I can take up a trade. Can I take a trade, or should I take a trade? Think about this. The time right now is what? It's 15:30. Okay, before 15:30, the market start. It has rallied upwards. The definite is that one thing is definite. It is going to rally upwards. Sorry, it has rallied upwards. Then it is going to rally downwards. And also, the manipulation is in our favor. Okay. In that case, I'm going to take a sell entry. Okay, and also there's a good displacement. We can see there's a break of these displacement. Price came back to that fair value gap. I have waited for that fair value gap. So here's a fair value gap, right? And this is the highlight fair value gap. I'll keep my stop loss at this point, because if it goes above this particular thing, okay, I'm done for the trade. But also I'll keep the stop loss at this point. I don't want to be too much generic about this thing. Okay, now okay, good, done. I'll take my entry, short entry over here at this point, and I'll place my stop loss at this thing. Okay, got it. Let me just save this session. Okay, done. Now let's anticipate an entry downwards. See, the minimum thing is that it will go till at this point. It is definite, right? But like at what motion I'll see. See, this is the upward price swing, and for the upward price swing, the four times, at least four times you should go post standard deviation, right? This level is lying between 2 or 2.5 somewhere. Okay, so then that is a good level. Okay, if it's lying between 2 or 2.5, wait, I should put 2.5 as well. 2.5 minus 2.5, I guess that is okay. So this level is coming between 2 to 2.5, and I feel like this is okay. Okay, but I will see what kind of movement it is showing to me. If it is showing me a great movement, then it means what? It means like, okay, we can go move ahead, right? I think this high should be enough. Showed a lot of rejection, right? It took out this high, then showed a lot of rejection, then went down, then okay, fine. Okay, this is the thing. Now open position. Sell. I want to do it at market. I want to do it current balance. No, I want to do it. Wait. So 0.10. Okay, current balance in 0.43. So I'll place the trade. Ta-da, 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 ta-da. Okay, it's going up or going down. Fine. Hey. Okay, it is making the people to take the order. Yes, done. If we want to take any other entry, we can take it from here as well. Okay, so this is a market maker buy model. This is a smaller market maker buy model. It's a bigger market maker buy model with a bigger displacement. We can see 1 2 3 displacement. It is a smaller market maker buy model with a smaller displacement, so we can take an entry over here and put the stop loss over at this point to take a target at this point. Okay, now let's see. I am going to take one more entry. Yes, I am going to take one more entry. This is the fair value gap that has been created, right? So right now, let's forget. Should I forget? No, I should not. So the price is gyrated, but see displacement, price gyration between the fair value gap. It's okay. It's taking the orders. Let's see. See. Oh, it has done what? It's taken the fair value gaps or not? Okay. Anyways, fine. I'll take an entry. Okay. But I'll not take that much of loss. See, $10 enough, right? Hmm. Should I let me just see what is going to happen. Okay, I want it to give back to that fair value gap. Okay, if it comes back, I'll take the entry. That's it. If it doesn't, it's fine. Okay, so it's forming two equal lows, right? We have $40 of the profit. Hey, man, what you saying? I can now, let me see things on. See, we are just zero point 0.5 things away from this fair value gap. There's a higher fair value gap that has been created. Can you see this fair value gap? I hope you could see this thing, right? Okay, so this anticipation I can take. Okay, so yeah, I'll take the take the profit. Okay, the profit has been taken. Now we took a loss at this point. We took a loss of what? Around $15, and we made a $44 of profit, right? So somewhere we are around 478. Got it. $4.78 of profit. Let's see how it is going to do some gyrations at this point. See this fair value gap. I hope you can see this. Okay, this fair value gap got touched. Breakdown. We took a profit. That's it. Fine. Good. But could have we kept this thing? Can you see? I'm going to drag this point over here. This is no fair value gap, and it has not been touched. And it's a very great movement. Okay, can you see the downward movement at this point? I told you, bigger time frame breakdown, then again price went back to this gyration, then broke down. Got it. So if I would have kept my like stop loss at this point, it would have been fine. But let's see if it comes back to that zone. I am really willing to take a trade again, sell towards this zone. Got it. But I'll be taking this trade. Let's let it come back to that zone because it should be attracted, obviously, right? Uh-huh. Wait. This is what it did. There's a fair value gap created in here and it went into that fair value gap and then it broke down. Got it. So this particular thing is way too much away. Got it. It is like just, doing an opposite swing of the opposite price swing. Got it. So hmm, let me just some nice tap water. Okay. It broke down. I can't do anything. If it comes back to this fair value gap, then yes, I can anticipate an entry because some sell side level it's being taken. But if I anticipate it to be taken down, then what it means? It means I want it to. Okay, let it be. Yeah. So this is a fair value gap, right? You can see, guys, fair value gap in here. Okay. I'll wait for the price to come back to this fair value gap. I'll put my stop loss at this point. Okay, that's it. So yeah, come into this fair value gap, guys. Hey, अरे यार, just. Okay, wait. Wait. I should demand the price again. But no, I'll go on 1 minute time frame. This is the zone I want it to be in. But wait. Uh, hmm. See, I didn't take it. That's it. I'm not gonna take it. Rewinding the price is not a very good thing. Okay, I'll not rewind the price. Fine, it comes, it takes. Fine. Otherwise, I'm not gonna take any kind of entry. That is it. Let it go. Okay. Price touch this fair value gap. Now it can come back. Okay. Show me a breakdown or maybe in that fair value gap. There's a fair value gap created here. Got it. This low is taken out. This low is taken out by this low. Got it. Fair value gap created. I'll do an entry, but with a very small stop loss. The least stop loss as I can take. Got it. So yeah, and the fair, I'll keep the wait. Should I see how it looks on 5 minute time frame? Okay, the price came back to this fair value gap inside this fair value gap. Okay, if I go on 3 minute time frame, I'll see this is the fair value gap. The price came back into that fair value and it will go down. Got it. Okay, then 1 minute time frame, I'll just see this thing and okay, got it. Now I'll just take an entry here. Okay, I put my stop loss at this point. Okay, and my target, see, is the 4 standard deviation coming at this point? Wow, the 4 standard deviation is coming at this point. So, and 2.25 is just below this lows, then yeah, definitely is going to take an out. Right now time is 21:22. It is 21 20 19 19 22. Wait, I have to subtract 12 from this. 21 minus 12 is how much? It's I guess 23, 24, 25. Oh, okay, 22 is 10. It means 21 is 9. It means 9:30. 9:30 I can anticipate entry because I will be wake up at that point of time. And then what I will do, I'll just take my entry over here, and this is my, let me just put it. So if it takes my if it takes out my profit, it's fine. If it doesn't take my profit, it's still fine. Okay. So this is stop loss, open position. I'm gonna take a sell, market, current balance, 10% loss, place trade. Hey, not again. I have to. Okay, what is the time right now? It's 21:23:65. I hate this about traders casa. Okay, and I have to do 21:23:65. Okay. La 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 la. Okay, we are at 6 5 21:23. Ha ha ha! It has went into that fair value gap. Arey, I should wait for my price. This was my price here, right? 21:23. Ah, hey, not 21:45. Okay, I just quickly form the things. Hey, not 21. Arey, I didn't load my layout. Shit. 3 6 7 Feb. Why the hell 7 Feb, bro? No way. Yeah, I only went what you have played back. Fuck it, yeah. Okay, it got taken out, but suppose, see, what's the time right now? It's 2 something. Okay, got it. Okay, 2 a.m. Right. It could have given me such a nice price movement. Let me just see. I hate it. I hate it. This about traders casa. Okay. Yeah, half an hour of the. So we could have somewhere gotten around 1:5. Nice, nice. 1:5 somewhere. Okay, right. And but let me just see. But we wouldn't have hit the target, right? Either I would have kept the target at this point, or either at this at the below of this point, right? This is highest sell side liquidity. So 15-minute time frame. Let's done. I gotta wait for the next trade. That's the time because I'm not gonna take the trade. There's no point of taking a trade. Okay, because the time is not good. I would be sleeping at this point. 4 a.m. Who's gonna take a trade at this point? Hmm. Asian session. It is going to eat out both the side liquidity. It went down, this down, then it went again up. It went again up to go down back. Okay, so somewhere around this consolidation, you can see, right? At this consolidation, it took out the first these lows, and then it took out the highs. Then what it means? It means it is doing Judas swing. Okay. Okay. If it comes back to that fair value gap, we'll really have a nice entry formed. Okay. But I want to see some structure formed, because if I take my entry here and put a stop loss here, it's going to be too much wide. Okay, the stop loss is going to way too much wide. Okay, and see why I anticipate, because most of the times I've seen that whenever the fair value gap it touches this point, okay, just touches, it is not gyrating in between, so it's not gonna go to the target. Okay, it has just see, if it comes back touches this point, it is again going to come back to touch it, because the fair value gap is mitigated. I hope I am using the right wordings. Okay, mitigated. Now, okay, if somehow, what is the time right now? It's 7:30 a.m. right? But I'll still keep seeing an upward pricing or not. I want to see it go upwards. First of all, this sell side liquidity is taken. I don't need to put it here. Should I have taken a stop loss or not? Hmm. Let's see what it does exactly before 12:30. Okay. So okay, got it. Oh, it has created a downward price swing. Okay, so at what point? 12:30. Okay. Oh, if I want to take an entry, I'll take an entry, a very short entry from here. Okay, at this point, this is the high. Okay, that's what I'm gonna do. Uh, so yeah, this position, this is stop loss, this is a target, and these are the stop loss. I'll open a position. I'll take a sell trade. I'll take a market trade. I'll take a current balance. I'll take a trade loss of around. Let's come on place trade. That's it. I'll just keep on gyrating it to the point, because there's a very high chances that this price is going to do swing downwards. Haha, done. Okay, got it. Hey, this sell side liquidity, I could have extended my price, right? Okay, because I didn't saw this is sell side liquidity, but this is what should I target for? This sell side liquidity should I should have targeted for. Got it. But anyways, these losses they happen, but we have to keep going, right? Let's see how much. Okay, by the way, this color looks so nice, right? In the color. Focus. Okay, the temperature of my laptop is good, right? I don't need fan, but I'll just connect it anyway. Okay, it will further cool down my laptop. We are streaming at 2K. What if we guys stream at 4K? What will happen? 2K is fine, yeah. 4K is unnecessary. Okay, fine. It's going to take out this sell side liquidity, right? We already know this. It is going to do this. 13:30, 1:30, and 3:30. The market will end. Sorry, the London kill zone I'm talking about. 1 minute time frame. Can't see anything. No sit to be seen. This sell side has been taken. This is the fair value gap. Just been touched. Surely it will come back to that point. It should come back to that point to give me some kind of entry. Hey. Okay. Damn. The price swing, bro. We are taking such a nice pricing. Can you guys see? We are slowly and slowly we are improving. And that is what I love. Okay. See, this is a side that has been taken. I don't have any kind of what do you call it? Movement till now. The side got taken. Sorry, I can't talk right now. Okay. So sell side taken. Got it. Now I do not have a bias right now. What I was anticipating, I took the profits. I made a profit, right? So 44 plus 23 and somewhere minus 15. So we started at somewhere around 445 something, and we are up $50. Fine. I guess $50 for around what's the day right now? Okay. I'll show the trades. Okay. This trade was on what? It was on. You can't see the trade, right? Oh yes, I can see it. So here's a trade on 6 Feb, then again on 6 Feb, then again on 6 Feb. Is there any other trade? Okay, there is one trade on 16 Feb, right? So yeah, 6 Feb, 6 Feb, 7 Feb. Okay, on the 6th Feb, like 1 or 2 days, we have made $50 of profit. It is fine. $50 is fine, right? Let's not just delete it. Okay. Will this price come back to this fair value gap? Is it going to be at the equilibrium? Let's check the daily bias. Okay. Go on the day, save your layout, and then you are right now over at this point. And now, what do you think? Is the price going to move upwards or is the price going to move downwards? If we just delete all these jargons for a second, then we can clearly see the price nicked. Okay. Now think about this. Mm, rank squads. Uh, what it is trying to do, man. Think about this. This is the fair value gap. The price will obviously swing high, but at least I want it to come back to the equilibrium point, right? Because equilibrium is necessary. We can target the equilibrium point, but if we go from this point to this high, right? The equilibrium point is right now over here, which I have already marked, right? So let me just delete this thing. So, and then after it passes the equilibrium line, see, somehow this sell side liquidity should be taken because this sell side is not taken. Okay, this sell side is got taken, so I'll just remove this thing. Okay, delete. This is sell side, this is sell side, this is the equilibrium line. If this reaches the equilibrium line, it is going to reach for this thing. If it reaches for this thing, then for sure it might reach to this equilibrium because there is a great fair value gap that needs to be balanced right now over here. Can you guys see this upward pricing? There's a great fair value gap. We have to somehow, balance, like go on and take this fair value gap. Got it. So I can still anticipate the sell side entries, right? Because the sell side is taken, we can still go to the equilibrium point. Fine. Our daily bias is still bearish. Okay, daily bias bearish, and what can we do? Yes, daily bias is bearish. Let's go on the 4H time frame. But one thing, guys, we have been forgetting one thing. So I'll just delete this. I'll delete this. I'll delete this. I'll delete this. Anything else? Buy stops. Buy stops are now upside. Okay, these are the buy stops. Okay. Sell size level have been taken, so let's delete it. Okay, what is this? Just a second, guys. Okay, But at least, is it going to come back and then go to the fair value? Or there is a higher time, bigger fair value gap that needs to be balanced? Okay, should I delete this thing? No, I should not delete because it is respecting this price movement. But what if I just make it little go? Yes, now it is respecting these levels little more. Okay, I was just clarifying. Okay, I was not doing anything. There is a fair value gap. Got it. It needs to be balanced out. See some price swing, equilibrium, price swing, equilibrium, but it broke down because of the liquidity. And there is some equilibrium point. After this equilibrium point, I might expect it to reach to what you call it. There are most sell side liquidities. So bearish scenario is more, and bullish scenario is less. Okay, then what should we do? Think about it. Uh, there any good view? There is one view. Okay, and then yeah, zero views. Average view duration is 2 minutes. Very good. Okay, I'll just play the price. See what happens. 1 hour fair value gap. Got it. Is it going to come at this level? If it's come back to that fair value gap, then I might anticipate an entry. But for now, I don't have any kind of. Uh, this is the fair value gap. Okay, and this is the recent sell side liquidity, which I accidentally targeted on. So should I have targeted this thing? But anyways, I can't do anything. Okay, equilibrium point is also reached. Now I am finally done with uh my buys. Now following is the week, we have some kind of unclear buys. It is now Tuesday. The price swing downwards, right? On Monday and Tuesday, it did downward swing. It somehow needs to, okay, it has done a great swing around these points. So here is the momentum that it took, and from this point it took at this point. Got it. So we really have a good momentum right downwards, but this momentum before it launches itself in the other direction. Okay, this one of the side equilibrium is balanced, right? So up downs equilibrium point balance, sell side liquidity taken. Now this recent swing that has been created, hello mic check, yeah. So this recent swing that has been created, it must be taken, okay, somewhere. Okay, and I want to see some kind of bottom forming. Then I'll anticipate this is the equilibrium point that it should reach to. Okay, but can it take out this sell side liquidity, because these are liquidities over here at this point also. Okay, and it can take out. So I'll still see the uh, selling entries. Okay, if it takes out this low somewhere around this and then goes back for equilibrium, it is good because I will be able to form some kind of entry. But if it goes directly, then there are kind of lesser chances, I think. Okay, okay. See, can you see how well it is respecting these equilibrium? Okay, it is just not that correct. Okay, now it is exactly correct. So how well it was respecting these equilibrium points. So it shows that these things work. Okay, but anyhow, I can see what's the time right now. 30:30 is when the London kill zone ends, right? And after that, I'll have to wait for somewhere for the New York session. But let's see what forms in. Okay. Hey, stop. 16:30, 4:30, 17:30. Okay, I'll just go back on the smaller time frames to see what is actually happening. I have no targets. I have some targets, right? This level I want it to be taken. Okay. So I'll take this. Okay, these are equal lows. Oh, very good. Equal lows being created, right? And this is what? equilibrium light, equal lows have been created. Some kind of entry will be found in this fair value gap if the price come back to the fair value gap. Okay, and before the price has started to swing downwards, okay, manipulation is happening. Okay, I want the price to come back into this fair value gap. Let me see if there is on a smaller time. Is there any fair value gap? Nah, just 3 minute. Okay. Okay, 3 minute I can take. Okay, 3 minute is a nice fair value gap. Okay. Uh, if you are looking for good risk reward ratio, obviously you're going to be taken on with what do you call it? Your trades. Okay. Hmm. I'll wait for the price to swing back into this point. Okay, or might be like this point as well. I'll cover it. Okay, somewhere in this zone I want it to get back, and then that's it. I'll take it in a sell entry and target these lows. Not much clear with my buy, so I'll be very specific about the price. Fine, we are entered here. We have entered here. So see, before 5:30, the New York session started. The price rallied upward. It means it is doing manipulation. If it is doing manipulation, okay. See, this is just a narrative. Okay, it is not fixed that it is going to be true, right? So if it has done a rallied upwards, okay, before and my sentiment is bearish, okay, it means it is manipulating the market to think that it's going to create some kind of bottom, okay, because everybody loves to cash bottoms, especially retailers. So sell sign entry, stop loss at this point, okay, and target around somewhere over here, okay. If I keep the target 3:1 ratio, okay, I'll just put an entry, open position, sell that market, current balance 0.1 ton, play straight. So let it be, guys. Let's see if it takes out. Ta-da, 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 ta-da. I can't click it that much, okay? Okay. Can I form any other entries before this upward price swing? Okay, think about this. I'm not much. This is 7.5 itself, bro. Okay, I've already taken one trade in this, so I should rally it downwards. Okay, is it? There's a high gap, right? These lows, and there is a. This is the low. Okay, it can gyrate back to this low. Hey. La 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 la. Okay, I should delete this point. Okay, delete, because I always want to see these levels, so I'm not gonna take any kind of what do you call it? Oh, somewhere in this zone I wanted to take to me. Hey, la 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 la. So before the price swing downwards, okay, Ra. So this is the high price swing before a downward move, and the four times standard deviation is coming near to it, so I can form an entry over at this point and put my stop loss there. So I will just keep on doing what? I'll just keep on trailing my stop losses. I'll just okay. I'll keep this target little away. Let it be. Why I can't click it? What the hell? Oh, got. See, I'm going to trail my stop loss. Okay, this is a fair value gap created. Price will again come back to the fair value gap to take out some kind of orders. Okay, okay, no fair value gap that has been created. Let's see if it is going to come down. Woo, nice. It took myself out. It took me out. Okay. Hey, by the way, I'm doing good with just $10 stop losses. Ah, so wait, and now I guess it is doing what? What's the time right now? It's 19:45. 19:45 is like 9, 8, 7, 7:45. 7:45, it means 7:30 p.m. has been passed. New York kill zone has been passed. I guess there must be some kind of entry that should be formed. Okay, and the price should come back to its what price should come back to its delete this fair value gap, delete this fair value gap, got it. And now this is the great price swing. The bottom has been formed, equilibrium has been reached, and no need to see the sell entries. But I'll say from this point to this point, the mid level is this thing, right? And somewhere at this middle, these are the highs, and this is some kind of what do you call it, uh, fair value gap, right? So let me just put my equilibrium line, copy, la 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 la, equilibrium. See, sometimes when these equilibrium things are important, I'll just mark it with these red things, okay? Because I am continuously I'm wanting it to see, because I need to see the higher and the lower level which are important, right? Okay, two views. Finally, somebody has viewed it. But you decrease the average view duration. At least today you should have watched it for like 2 minutes. Fine, I'm doing it for myself. Okay. Now, one, two, three, four, five, somewhere around this fair value gap. Okay. This is the fair value gap. This is higher. Uh, this is the fair value gap. Is it been touched? No. This fair value gap, it has just been touched. Can you guys see this fair value gap? Let's go on a 5 minute time frame. Can we see that? Can we still see that fair value gap? Yes, we can still see that. So it's like important fair value gap, and if it is reaching the equilibrium, I will expect it to reach to the equilibrium and take out these highs. This 1, 2, 3. Okay, these highs, these needs to be taken. Okay, and near to this point, this is the like nearest high. Okay, so I should also be looking at this point as well. Nearest high. I'll name it. Okay, nearest high. Okay, okay, done. And hey, shit color. I don't want it top middle, left, right. I want it on right, and don't want the color. See the color. It should be white. Okay, make it bold, bro. Gotta be like this. Yeah. And for this thing, I'll just copy it. Okay. Now this one is an equilibrium, right? If this is the bottom, right, then this should be the equilibrium point. But this is the upward price swing. Got it. Uh, these are not like clear lows. Okay, so these are like not that much clear lows. It could have been like some kind of fair value gap. The price went into that. So I feel there are less chances for it to go back to this low and then go to equilibrium. Going to equilibrium and then going back to low is a higher chance. Correct. That's what I'm thinking. Okay, fine. Now it's in the fair value gap. Got it. Around this fair value gap, I'll be taking an entry. I can put my stop loss at this point, or I shouldn't. Think about it. What's the time right now, by the way? It's 8:33. It's 8:30 p.m. I will obviously be awake to take an entry. One, two. Okay, these. Hmm. I expect a less chance of doing this. Uh, because it might be reaching to this higher fair value gap. Can you guys see? It might be just reaching to this fair value gap to take an entry and then go back. Because just directly going back, it will not reach this. extraordinary amount of fair value gap. Can you get this bigger fair value gap? So it might be taking the entry. I'll still look for the sell side trades. Okay, some good sell side trades, right? Uh, hey, okay, last entry of the day. Fine, take it. Uh, Now I am getting tired. Shit. What's the time right now? 20:47, right? 7 20:47. Oh, fuck it. I'm done. Ah, 7 20:47. First, let me load the layout, okay? Hey, yeah, 7 20:47. I should have kept it here, but anyways, okay. Is there any kind of entry I could for? Is it generating liquidity or doing what? Back to again to the same position. Now I can like take an entry. Got it. La, 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 la. Takes out. It takes out. I don't care. I don't care. Okay. It was a buy side entry. I'm done for a day. Okay. Fine. No more backtesting for now. It was just generating some liquidity before it reaches to the equilibrium, and then it will just break down again because see, it has created liquidity. It has generated the liquidity, right? So just don't expect it. Got it. Uh, okay. This layer will be taken. Anyways, it has created. It will swing back to the equilibrium first, okay, and then it will take out those the lows we are talking about. But if it swings back to those equilibrium, we have to be careful because it might take out these highs as well, okay, because these highs are not taken. It can gyrate to that point. Got it. So I guess one day. Okay, I think that is it for today, guys. Okay, we are going to end our session over here. We are at $480 of profit. It means for this session, for these 2 days of the trading, we did 0.3%. That is fine. Okay, we'll slowly and slowly we'll just improve. We'll keep on improving. Okay, so $480. If it was a pro forma account, we would have got our $500 of profit. Okay, and output, and that is it. Let's save it. Done. So take care. See ya. Bye bye. Have a nice day, and we'll come back to another session. Till then, see ya.